Unfortunately, ADA 30 cents. Better than 3. It's all about money with you people. You just magically believe you get to a certain price point and then everything in life gets great. Everything is incredible.
It may seem like we're going around in circles, but if you take a critical look, we are not. In this market laced with fluctuations, certain emphases need to be hammered severally. Last year, we talked about making 100k with Cardano ADA, and here it is again. Perhaps an investor badly needs this reminder. Not so many things have changed around here though. Amid falling prices and the unhealthy state of the crypto market, the government's sentiment towards cryptocurrencies has not changed. While addressing the U.S. House Committee on Financial Services a year ago, Federal Reserve Chair Jerome Powell said that the existing unbacked digital currencies are vehicles for speculation, and this opinion has probably been reinforced given the present market situation. According to him, the existing digital currencies are vehicles for speculation. They're not used in payments, they're not a store of value, and they are speculation like gold. That's what they're used for. During this hearing, Powell hammered that the Fed has not decided on issuing its own central bank digital currency. However, the central bank is determined to get to the bottom of that issue to get a grasp on both technical and policy issues, indicating that there is no rush to issue a digital dollar. He said, "This will be something that will invest a fair amount of time and expertise to get it right." Jerome Powell has made it clear severally that cryptocurrencies should not hamper the ability of law enforcement to track payments, and for every crypto investor, this is not something we should tolerate. The Fed head compared the growth of cryptocurrencies to other technologies such as railroads, telephones, and the internet, highlighting the importance of developing a regulatory framework that will prevent malicious use cases of the likes of terrorism financing. Well, there are so many dead coins already. These are coins that couldn't survive the hard seasons due to unseasoned launches and attacks. Crypto is volatile, and since all eyes are on Cardano ADA, so many expectations have been set. Many are wondering whether Cardano would eventually join the list of dead coins since it's lagging in many aspects. No one wants to look beyond the surface anymore. The ride is getting boring, and it's quite understandable. From mid-March of 2023, crypto analytics platform CoinGecko reported that 1,866 of the 6,300 cryptos listed in 2022 were already classified as dead. This graveyard of cryptocurrencies added to an astonishing 4,367 crypto projects that were listed in 2021 and have since died. Despite the large number of coins that have disappeared and probably failed the test of time, 2021 was a boom time for the market. Speculative investments like meme stocks took off in early 2021, courtesy of a massive increase in government spending and lax interest rates, and cryptocurrency was one of the big beneficiaries of this trend. During that year, the market capitalization of the industry rose from $965 billion to as much as $2.6 trillion, according to reports. Now, reinforcing a huge chunk of this growth was the money flowing into coins like Dogecoin and other trendy yet questionable crypto investments like the Omicron token, as well as Bitcoin and Ethereum. Unlike other speculative investments, meme coins were essentially created as a joke, hence the name meme coins. They are driven often wholly by internet hype, and their breakneck upwards momentum propelled some investors to pile in simply out of fear of missing out on an easy and comfortable gain. As expected, the success of the industry led others to try and imitate the success of these assets by creating tokens of their own. Some of these assets succeeded, others failed, and now we can't help but get scared. Experts are rolling out the predictions concerning Cardano, most of which, to be frank, are not pleasing. Recently, widely followed crypto analyst Benjamin Cowan warned that Cardano is repeating a 2019 downward pattern. In a new strategy session, Cowan argued that Cardano was yet to find a bottom by comparing its 2023 price action to its market structure in the second half of 2019, when ADA kept finding new lows. He said, the second half of 2019 was probably the hardest part of the cycle for Cardano, because it wasn't very exciting. You just watched the altcoin market slowly bleed out. There was certainly a lot of pumps, no shortage of pumps. We had tons of them. This one right here, in 2019, from 3.5 cents to 5 cents, was 41%. This one right here, from 4.1 cents to 5.8 cents, was 40% as well. We had a lot of pumps like that, and they ultimately just still faded. Per Cowan, ADA rallied in 2023 similar to 2019, when the token formed a double top patterns and then dipped below the bull market support band, which in technical analysis is the combination of the 20-week simple moving average and the 21-week exponential moving average. He was all about the technical updates. He added, and we saw the market capitulate to new lows, with ADA at 7.7 cents. And even then, it did not mark a new low for ADA, because we saw it rally and then fade to 1.7 cents. I know it was not a popular review to talk about this, but so far, it hasn't been any different. We saw ADA put in a low into 2022 at 32 cents, just like it did in 2018 at 2.8 cents. We saw it pump in 2023 just like it did here in 2019. You got two tops here in 2019 just like we got over there. We go below the bull market support band in July of 2019 just like it did in June of 2023. It has played out almost identically as the last cycle. No one knows what to expect next, and even though it is possible to make 100k with Cardano ADA, the crypto environment is uncomfortable, and the conditions definitely look messy. Nevertheless, the Cardano founder Charles Hoskinson has not left us in the dark. In a recent AMA, Hoskinson started with the launch of the Intersect, a member-based organization shaping the Cardano future with over 200 members joining in the last few days. He also provided details on various things, including moving code from IOHK and Intersect in the coming days. But he first dug into XRP's recent big win. Addressing Judge Torres' ruling in the US SEC versus Ripple lawsuit, Charles Hoskinson explained that it was indeed a significant win for the community. With XRP getting listed on major crypto exchanges, it also established a legal foundation to argue that coins like Cardano, Solana, Polygon, and others are not securities. He further asserted that the ruling weakens the US SEC's argument and urged lawmakers to pass crypto legislation in the US to provide clarity to the crypto industry. According to him, ADA is not a security irrespective of what the SEC says, as the project is run by the community and open sourced. Furthermore, Charles Hoskinson revealed successful progress regarding data protection focused sidechain Midnight, congratulated Ergo for being the first blockchain to roll out the NIPOPOWs, and his focus on multi-delegation on Lace 1.4 version. He went on to explain that the Hydra Layer 2 scalability solution, showing releases, contributors, and features expected in the coming updates. Also, in a new video, Hoskinson provided an update to his 318,000 YouTube subscribers on Cardano's identity-focused project in Ethiopia that aims to archive student academic records, and a piece of good news followed. He announced a new goal of onboarding 5 million new users onto the ecosystem's Lace wallet. Sounds exciting, right? The Cardano founder explained that his long-term goal is to help onboard 5 million people onto Lace, Cardano's Web3-enabled crypto wallet.
But on our side, on the software side, things are moving along, and we're just watching student after student get enrolled. The long-term goal is to get 5 million. That would cover the entire K through 12. It'd be very exciting to get everybody who's young in the country in, so 25 or younger, and that would probably be over 20 million or 30 million. But you just have to kind of take it one day at a time.
Most recently, digital asset manager CoinShares reported that institutional investors are becoming more optimistic about altcoins despite Bitcoin and the overall market suffering outflows. In its latest digital asset funds flow weekly report, it disclosed that halfway through 2023, digital assets have seen almost $500 million in inflows. According to the report, digital asset investment products saw minor outflows totaling $21 million last week. Trading volumes for digital asset investment products were low at $915 million for the week, compared to the $1.5 billion weekly average this year so far. The development was reflected in the broader Bitcoin market, which saw the equivalent of $16 billion traded last week on trusted exchanges, compared to the weekly average this year of $52 billion. At the half-year mark, digital assets have seen just under $500 million of inflows. Altcoin rivals Ethereum and Avalanche saw minor outflows totaling less than 2.5 million combined, and other altcoins took in inflows. Cardano, Solana, and XRP products enjoyed inflows of 0.64 million and 0.6 million, and 0.5 million respectively. Making 100k with Cardano ADA seems far from reality, but things can only get better from here. Let's keep a close watch on the unfolding metrics and updates. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.
It's not about the money. At its core, it's always about your rights, your freedoms, and what it means to be human. And if you can't see that, I don't think you understand the point of cryptocurrencies.